Anjali, should we start now?
Yeah.
Yep.
Do you need to make any announcements or can I begin?
We can start, Himanshu.
Okay, thank you. So very warm welcome to everybody on this webinar today on KPMG India's webinar on APA and MAP, Achieving Tax Certainty in India. Now, when it comes to any MNC proposing to make investment in any jurisdiction, tax certainty is one of the important parameters which it takes into consideration. When it comes to making investments in India, one of the things which at times acts as a dampener for MNCs is the potential long-drawn tax litigation in India which it may have to encounter. But the silver lining in the cloud here is the Indian APA and MAP program, which has been very successful and which has to a great extent helped several taxpayers avoid tax disputes in India and thereby attain tax certainty, and also avoid possible double taxation in the home country and in India. So the APA and MAP program has seen significant success in India over the last few years. If we talk about financial year ending FY23, we saw the highest number of APAs getting concluded by India in that year. And that reinforces taxpayers' confidence and conviction in the Indian APA program, and also demonstrates the maturity and eagerness of the Indian tax administration to resolve possible disputes under the APA program. Just to improve things further, a new APA team has been constituted in the last year in Gurugram, which will provide further steam to the APA program in India. So with that background, let me now introduce the panel members for today's webinar. We are privileged to have with us two very senior officials of the Indian Tax Administration. Firstly, I would like to introduce Mr. Rajat Bansal, who is the Principal Chief Commissioner of International Tax in India. Mr. Bansal, in his capacity as the Principal Chief Commissioner of International Tax, is currently heading all the field offices for international tax, transfer pricing, APAs, and dispute resolution panels across India. He brings with him over 35 years of experience in various roles in the Indian Tax Administration. More specifically, he was the Indian Competent Authority during the period 2014 to 2019. He was also appointed as a member of the UN Tax Committee and worked on updating of the UN Model Tax Convention, UN Transfer Pricing Manual for Developing Countries, and UN Handbook on Disputes Avoidance and Resolution, amongst other things, to provide guidance to developing countries on international tax policy. Mr. Bansal, welcome to today's webinar. I now have the privilege of introducing Mr. Bhaskar Goswami, who is the Indian Competent Authority. Mr. Goswami has been working with the Indian Tax Administration since 1995, and he has played various roles within the tax administration. Most recently, Mr. Goswami was the Commissioner APA for almost 4 years, and last month, he is moved to the role of the Indian Competent Authority. He has been instrumental in conclusion of a large number of unilateral and bilateral APAs. Earlier, he was also a tax policy analyst at OECD. Mr. Goswami, welcome to today's webinar. I would like to now introduce two very senior and experienced partners from BSR on this panel, on this webinar. I'd like to first introduce Manoj Pardasani, who's a senior partner with us, who heads the North India BSR transfer pricing practice, and is a well-regarded expert in the field of APAs and MAPs. We are also joined by Rishi Harlalka, who heads our transfer pricing practice in the southern region. So warm welcome to Manoj and Rishi also on this webinar. Now, the way we propose to proceed with the webinar today is Rishi will first talk us through the transfer pricing APA and MAP landscape in India. And thereafter, we'll have a panel discussion, wherein Mr. Bansal and Mr. Goswami will participate, and that panel will be moderated by Manoj. So with that background, let me now hand it over to Rishi. Rishi, over to you.
Thanks, Himanshu. Good afternoon, good morning, good evening to everyone. In more than its 2 decades of existence, the TP landscape in India has constantly evolved and matured. Recent trends indicate a distinct shift towards a risk-based audit approach by the tax authorities, which is a welcome move, as this results in the efforts, time, and resources being spent only in high-risk area, rather than a compulsory audit of all taxpayers above a certain monetary threshold, as was the case earlier. We have also seen in recent times a variety of increasingly complex issues being subject to the matter of audit examinations. For example, intangibles, patents, PE and profit attribution, free of cost items, significant people functions, to name just a few of them. The focus in recent times has also now graduated to a more intensive fact-based examination in many cases, which accords primacy to the FAR analysis of the taxpayer and taking a customized and a nuanced view of the taxpayer's operations. Reference is also starting to be made to the data available through the CBCR and master file mechanisms, which is now available with the tax authorities via the information exchange mechanisms with the treaty partners. Given the subjectivity inherently prevalent in transfer pricing, the India APA program continues to remain a much sought after route for risk mitigation. India's APA program, in its more than a decade of existence, in fact 11 years, has played a stellar role in achieving tax certainty and double tax avoidance, which are key focus areas of the government policy in transfer pricing. And as Himanshu alluded to in the beginning, that they are the cornerstones on which this program was conceived. The India's APA program has witnessed over 1,600 APA applications being filed and over 500 APAs being signed over the past 11 years, which has resulted in a cumulative tax certainty of over 3,200 years. This is again made possible because, like as you all know, it's 5 years forward and 4 years backward, and it's possible to have a 9-year period of certainty. Now, even though most of the unilateral APAs have been concluded within 25 months to say 40 months, currently the average processing time stands to about 60 months. But the tax authorities remain committed to decrease or reduce these timelines and have therefore actively focused on clearing the backlog. In fact, in FY 22-23 alone, almost 95 APAs were signed, including 32 BAPS. This is, to my mind, possibly one of the highest APA conclusions in the world during this period. There has been also a distinct uptick in the number of bilateral APA applications which have been filed in recent times, with as many as 77 being filed in FY 22-23 alone. This reflects the trust which is reposed in the bilateral process by the taxpayer, and also reflects a deeper understanding with our treaty partners. UK, US, Japan, Switzerland, Germany are the countries where we have the maximum BAPAs with. Now, when we look at what areas the APAs are generally concluded, I think the information technology sector has been the key and the dominant area where we've seen most of these conclusions, both in the unilateral and in the bilateral space. But the coverage is now becoming secular with various other sectors like pharma, banking, insurance, electronics, and other sectors being included. The kind of transactions also which we have seen have traditionally been your provision of services or import of raw materials, but have of recent also been quite varied, ranging from licensing of intangibles to provision of intragroup services to financial transactions, to AMP transaction and others. We see most of the APA conclusions centered around using either TNMM or the other method as the most appropriate method. Now, in addition to APA, we also have the MAP process, which continues to be the most effective dispute resolution mechanism in cases where tax adjustments have already been proposed. Even in the case of MAPs, the number of cases closed in 2022 are substantially more than the number of new MAP applications invoked, which again reflects the trust reposed by the taxpayers in this process and the priority accorded to this route by the tax authorities and the treaty partners. So friends, we are at a very interesting juncture at the landscape where lots of things are moving, lots of things are maturing. And to discuss all of this and much more, I hand this over to Manoj to take us through all the various facets relating to on this subject, along with the August panel of Mr. Bansal and Mr. Goswami. Over to you, Manoj.
Thank you, Rishi. Good morning, good afternoon, good evening, depending on which part of the world you're joining. Thank you for being here. Once again, greetings for Mr. Rajat Bansal and Mr. Bhaskar Goswami. Jumping straight in the issue, straight into the subject, since I know a lot of participants here are very keen to hear from both of you. Mr. Bansal, sir, if I may turn to you first. As the leader of the transfer pricing administration in India, be it the TP officers, DRPs, APA commissioners, what is your perspective as regards what are the key milestones that the Indian APA program has seen over the years? How does this program interplay and coexist with the TP assessment and the DRP regime? And also, what do you see the future of the APA program, particularly considering the time effort that it requires, as well as the bandwidth of the officers that is there today? Your thoughts, sir.
Good day to everyone who has joined from various parts of the world, and thank you, Manoj and KPMG, for inviting us to this seminar. First of all, I'd like to clarify that whatever I'm saying is in my personal capacity, and these should not be necessarily taken to be the views of Government of India. So to your question, Manoj, what are the key milestones of the APA program? Now, I will say that there are milestones in different areas. There are milestones on legislative or rules front. There are milestones on infrastructure front. There are milestones on implementation front. So first of all, on legislative front, as all of you may be knowing, that APA legislation was introduced in India in year 2012. After that, it has been supplemented with various other aspects. For example, rollback was introduced in 2015, and there was a hitch in concluding bilateral APAs with the countries in treaties where Article 9.2 was not there. So in November 2017, it was clarified that even without Article 9.2, a bilateral APA is possible. And then I can think of, lastly, another milestone of the same significance being an amendment in law to allow APAs for attribution of profits to a PE. Earlier, this was not there in law explicitly, and year 2020, this was also introduced. So these are some of the milestones in this area. Now, coming to infrastructural milestones, as Rishi pointed out in his presentation, has brought out, there were, I would give a few more details. Initially, we started with just one APA commissioner stationed in Delhi and teams in Delhi and Bombay. Then slowly we expanded this very swiftly. It was expanded to three more APA commissioners, one in Delhi, one more in Delhi, and one in Bangalore, and one in Mumbai. So we increased our geographical coverage of our teams, and this helped a lot in dealing with the applications. Then we also added another team in this year, fifth team stationed in Gurgaon, exclusively to deal with the bilateral APAs. So now we have 5 teams, and accordingly their team members have also been increased, and we are much more in numbers than what we were in year 2013. Now, this infrastructure wise, the teams have gained experience, and they have it's an on the job learning kind of I would say exercise or process, where the teams also gained insight and experience about the transactions, new kind of transactions that came through the applications, and therefore now they are, I would say, equipped to deal with many more kind of transactions than they were when we started. Now, another one I was mentioning was the implementation milestones. So implementation wise, it was right from very start, it was a very good, I should say, good uptake. And in year 2014 itself, I remember the first bilateral APA with Japan was signed. So within 1 year, we could conclude one APA with Japan. And thereafter, as you can see from the publicly available statistics, every year there have been sufficient number of applications. Total 1,600 applications have been filed, and the composition has tilted from more of UAPAs to mix of BAPAs and UAPAs. And in the last 2023, we have many more BAPAs. It's about 40% of the total applications. So implementation wise also, there have been number of milestones. Now your next point, Manoj, as to how does it play with TP audit and DRP regime, and how does it coexist with that? Now, you see the international transactions and the number of taxpayers which will have international transactions and which will have a TP documentation related obligation will be much more than what we have as APA. And naturally, everybody all over the world, the experience shows that everybody may not opt for APA. Some will opt for TP audit, and some will accordingly that will move to DRP regime. And there also, I would say the approach has been of risk-based assessment. We moved on from a threshold-based picking up of cases for audit to risk assessment-based approach. And the number has been, therefore, it has been become more sophisticated. And there also teams have gained experience. And simultaneously, the APA program has been there since 2013, and people are, this is an excellent way of achieving tax certainty for a period of 9 years, ever since rollback was introduced. And therefore, there is safe harbor regime also for certain international transactions. So overall, we have a comprehensive kind of framework available for tax certainty and dispute resolution. So I think to your last point, what is whether the time will be able to cope up with the increased number of APAs, and what is the future? So the increased number of APAs we are trying to match with our increased resources, increased expertise, and also we are thinking of more and more ways and means to deal with increased number of applications. Like we are trying to find methods where, for example, a renewal APA is there. So what can be done to hasten its conclusion? Or if it's we are also conscious of the APA applications which are there for very long, and what to do with them and how to conclude them faster. And I would say that let us look at when we see the chart that was shown by Rishi, there the average time of conclusion is not the only indicator. We should see that there were highest peak for UAPAs was from 25 to 36 months. So therefore, the maximum number of cases were concluded between 25 to 36 months, which is not bad. And for BAPA, it was slightly more, which is understandable because BAPAs involve 4 parties as against 2 parties, and we have to coordinate with the foreign tax authority also. So this way, I think I'm quite hopeful that we'll be able to conclude more and more APAs with a reduced time frame. And to sum up, I would say that I see the future of the APA work to be very bright.
Well, thank you for those very detailed insights, Rajat sir. It's actually heartening to see this program grow, and also, talking about interplay and coexistence. Some of the APA commissioners today or recently, were also transfer pricing officers a few years ago. So I think the experience gained in the transfer pricing administration is being put and leveraged, for the benefit of the taxpayer. So that's very encouraging. Thank you for that, sir. Mr. Goswami, turning to you, and given your hands-on experience with both unilateral APAs, bilateral APAs, as APA commissioner, and now in your competent authority role, what do you see as the key enablers for the success of both the APA and the MAP program here? As well as, we've seen this, we've been talking about it, 2023 saw 95 BAPA closures, so many more BAPA applications. What's behind this? What do you see the future? And is there the focus on bilateral increasing more? Is there an influence because of the BEPS action plan? Your thoughts, sir?
Thank you, Manoj. Now, to begin with the first point about what is the key enabler of this program, I believe that the one key enabler is, or what has led to whatever success we have achieved, is the ability and the desire of the officers concerned, everyone in the decision-making matrix, to come to a solution that is workable. See, rather than trying to go down the beaten track or trying to reinforce what we have done in the past, everybody is interested in finding a solution to the problem and in coming up with an answer to the questions that an applicant might pose, which are within the bounds of transfer pricing principles, as also in commercial realities, and answer the needs of the revenue. So I think that pragmatic approach and that problem-solving attitude by everyone in the decision-making matrix, and of course the cooperation of the applicants, is one of the key enablers in both the APA and the MAP programs being as successful as they are. As regards why BAPAs are increasing, see, it is not that the revenue or the tax administration is trying to push anyone towards filing a BAPA. The filing fees is the same. The way an APA team would process a unilateral or a bilateral is the same. But I'm sure that taxpayers see some distinct advantages in a BAPA, which they do not see in a unilateral APA. Though it is true that a BAPA's processing time is longer for some maybe valid reasons, but there are some, the taxpayers obviously see certain advantages, and therefore they are opting for BAPAs. On the BEPS Action 14, yes, it is a minimum standard and suggested minimum standard, but I think this is a normal growth of any APA program. To start with, everyone tests the waters and comes through a unilateral, and as the program matures, the number of BAPAs increases. Sometimes certain jurisdictions you see most only BAPAs or a large number of BAPAs. So I think that's a natural movement of or the organic growth of any program, and that's where we are.
Oh, thank you, and I think you said it very right. And think of it. It's been over a decade with the APA program in India. People are filing their second renewals, I think, and this is also the time when we are seeing increased activity and interest in the bilateral process. So truly, the Indian APA program has matured and is going to and has reached the next stage. So that's very insightful, sir. With all of this background and context setting, if I may turn to specific transaction specific or issue specific discussion, and one of the most talked about controversy in the transfer pricing landscape, as you all will guess, is around the marketing intangible or the AMP, advertisement marketing promotion. expenses. This dispute is pending with the Indian Supreme Court for last several years. The MAPs on this topic, and there are dozens of them, are also on hold because the issue is pending at the Supreme Court, and the Competent Authority would find it difficult to decide these or negotiate on these. At the same time, there are few APAs, unilateral predominantly, which have been negotiated and agreed on this. Now, involving the AMP transaction. How does the AP office look at this AMP controversy, and what are the key principles which the taxpayer should bear in mind when they're discussing AMP related APAs with both whether with your office, and I'll request views from both of you, sir, Mr. Rajat sir and Bhaskar sir.
So, Bhaskar, okay, should I come in? All right. So, as you all of us may be knowing that AMP is a issue which is disputed in audits, and the view of the tax department about AMP expenses being an international transaction and benchmarking the same has been subject matter of dispute, and it is before the highest court at the moment. And the view, there are two very well-known decisions at the High Court level, and I'll not go into the details of those decisions, but due to this, the matter has not reached finality in the audit sphere. Now, the issue is whether in APA we can set this controversy at rest in a case or in an individual case, rather than litigating. So, as Manoj mentioned, there have been some applications for requesting for an APA for a AMP related transaction, or in some case, I remember even during the process, it was added as a new transaction. So, therefore, I would say the first essential requirement from revenue's point of view would be that unless it is accepted that AMP is an international transaction, or rather that is sidestepped, the matter will not proceed, because that is the departmental view before the courts, that AMP is an international transaction. So therefore, it doesn't seem possible for us to accept that AMP is not an international transaction at all. Now, if we move beyond that and we try to benchmark, then there can be ways found to decide on this issue, and as has been happening also, as I have seen. So in those cases, because there is something called bright line approach, which was not upheld even in a distributor's case by the High Court. So therefore, some different approaches have been tried out in the APAs pending with us, and there it is tried to segregate or shift the element of brand building expenses from the total advertisement, marketing, promotion expenses. And those expenses are, if agreed upon by both the parties, then those expenses are expected to be reimbursed to the applicant in India, which is incurring these expenses on behalf of the foreign AE, and with a markup that reimbursement is possible. And that kind of benchmarking is possible for the purpose of an APA. Other way could be that slightly enhanced markup is possible for reaching an agreement on that APA, because APAs are ultimately a practical way of concluding the matter relating to benchmarking of international transactions.
Yeah, thank you, sir. Yes, sir. Yeah, so that actually largely sums up what is at play over here. As sir rightly pointed out, that the first requirement is for the taxpayer to include this as a covered transaction. As a member of the APA team, as an additional CIT or even as a CIT, I saw that taxpayers did want to get some sort of certainty on matters related to AMP, but they were hesitant to include this as an international transaction. Now I get the point that everyone, including the revenue, wants to protect the positions in an ongoing litigation. But at least even if AMP is not reflected directly as an international transaction, at least mention of the issues related to advertisement and market promotion should be explicitly mentioned as part of the covered international transaction. Once that happens, there are, as Sir said, there are many ways of going about it, and we have done it. We have done it in unilateral. I think now it's quite a few. It's not just a few. It's quite a number, where we have generally we have taken an approach of aggregation. In some cases, we have segregated it and benchmarked it. So I don't think that as far as the APA program is concerned, unilateral as also bilateral, the pending litigation has been an issue. As long as most of the APAs that we have concluded in the unilateral space, they do contain a caveat that this is without prejudice to any stand that both parties would take in any ongoing litigation. So it's completely doable, and it has been done. And I don't think taxpayers or applicants should hesitate on approaching the program on this matter.
No, that's very encouraging and good to know for all the participants. And I think very loud and clear, both of you said that it has to be identified. AMP has to be identified as an international transaction which needs to be covered, or at the very least, it is a significant function. It's a significant activity being undertaken as part of a larger international transaction. It could be a distribution business, for example, or some other kind of a business model where this is an important function which has to be clearly articulated as part of the APA. So absolutely there, sir. Thank you for that. Now, another trend that we are noting over the last several years now, actually, more and more cases are coming up where companies have set up a structure of a variable royalty, and APAs have been sought on these. Some APAs have also been concluded on this. What is your experience and what are your comments around variable royalty related transaction structures and APAs for them? Again, I'll request both of you, Rajat sir and Bhaskar sir, for your thoughts.
Bhaskar, would you like to come in first?
Yes, sir. Manoj, to be very frank, variable royalty has not really worked in the unilateral APA space. Let me put it right out there. And it has proceeded to some distance in the bilateral APA program. I do not know whether or how many have been concluded. To my knowledge, I'm not sure how many, but let's put it very clearly that it's something that has not worked so far in the unilateral APA, and there is a reason for that. Because I don't want to get too case specific about it, but the arguments that are put forward by applicants in these cases, they're generally, as an AP, even as an APA team who is looking to resolve the issue, they're not very, very, what should I say, very, very convincing. It is safer or better to have a kind of a fixed margin, fixed royalty rate model, which will work. Which will definitely work. Unless it has its own absurdities, it will work. A variable royalty model, I have seen that in bilateral APAs. There may be some justification for that, but somehow there are limits to what can be argued by the applicant. I'm being very frank on this. So. Applicants are free to try, and that it may also succeed in certain cases. But I frankly speaking, it's slightly a difficult area to enter. So I think one should hasten with caution if you want to make such a claim.
So I think Bhaskar has already summed up the approach or the experience of our experience with the variable royalty cases. And I would just add that generally for royalties is basically a payment for the intangible being used. And therefore, that value, I do not see it as a variable. So in any case, in principle, I think that this is a difficult area. And yes, of course, we are receiving applications and Bhaskar proposals we are receiving. And when it comes to valuation of benchmarking of the royalty transaction, but then it may be a longish process as compared to a proposal of a different kind where royalties were proposed to be benchmarked on a different basis. So I'm saying that it's not a closed option, but it's a difficult one. So we should treat carefully here and see whether we want to go that way or and then that's how it is.
So I think the message I take away, if I summarize it correctly, is that variable royalty will not be supportable in everybody's facts. It will have to be very, very fact specific. The merits will have to be very strong as to how does that business structure or how does the intangible or other circumstances in which the business is run support a variability to the royalty proposed. And it's not a transaction or a structure which many or most businesses could adopt, but it's not a closed door. It will be very case specific. That's the takeaway I'll take from there. Thank you. So moving on, another classic transfer pricing controversy is around HQ cost allocation or management fees allocation. A lot of APAs have been concluded on this, and we've seen variety of different models or approaches in these APAs. There are cases where the entire management cost allocation was accepted. In some cases, there was a cap placed that the charges cannot exceed a certain amount, certain percentage of the turnover or a certain percentage of profits. And sometimes we even saw cases where the overall charge was, given a haircut of X percentage. As you evaluate these situations, what are the key factors that you keep in mind, and what are your thoughts on this? What should taxpayers be aware as they approach the APA office for management cost allocation related APAs? Mr. Bansal.
So management cost related APAs or the transaction of IGS or intra-group services is one of the most common transactions, and it has been subject matter of audit as well as MAP, I may tell you, for quite some time. Now, there is the issue of benefits test here, and these are often weighed against the benefits accruing to the recipient of the services. And therefore, there have always been in kind of litigation or kind of dispute. Now, it's very difficult to establish that there has been a benefit because it is not exactly measurable or ascertainable from the expense itself being incurred. And my experience as the competent authority and cases I remember, the issue was that sufficient documentation was not available, or there was an issue. As far as benefits test was concerned, that was always an issue. So even the haircut approach Manoj is referring to, I remember having applied it in certain cases and it was resolved with the foreign competent authority also in that way. So in that backdrop, let us come to the APA situation as to what are the criteria or parameters on which this approach of haircut or a fixed percentage of sales approach is being used. So therefore, firstly, let me tell you the difficulty we feel that will be there for following the approach of allocation of cost pool to different users of those IGS. We feel that there may be an issue at the compliance audit level when the TPO does a compliance audit, as it is done in India or maybe in every country. After the APA, there is a compliance audit to see whether the methodology and the other conditions in APA have been fulfilled. So at that stage, for both sides, justifying the cost on pool on one way, allocation keys on other, etc., we feel that it will be quite difficult. Now, this was one part. And second part is that IGS is obviously a base eroding payment, and due to this, there is always some kind of subjective payment for which exact benchmarking is also very difficult. So therefore, there are many factors affecting a very standard or ideal kind of benchmarking for an IGS transaction. So I think that the haircut or the percentage of sales are a practical solution to deal with this dilemma or this situation. And there, what number of things could be seen that firstly, it could be seen that in similar cases, which is an arm's length situation, what would another party is having as percentage of sales, such services, if at all? Or what are the, there may be a case that there are no such services in the other case, but that does not mean that there could not have been such services in a similar taxpayer's case. So ultimately, it is a practical way of setting a value to the percentage of sales, IGS to sales ratio, as well as the haircut. Personally, I'm not very much in favor of the haircut approach for an APA, that upfront some percentage is not to be discarded. I would prefer a percentage ratio for IGS to sales as a more principled approach as compared to the approach of haircut.
Thank you, sir. Right. Moving on, sir. There is, the country is going through a phase where there's a huge focus on Make in India. There is also a focus on, ease of doing business in India, ease of operations. A lot of manufacturing units have come up in the recent years and continue to come up. And with the government's focus, I hope they will. Now, some of these businesses will not make profits in the first 2 or 3 years as they set up. There is a gestation period for pretty much every type of business, particularly in manufacturing. People have apprehensions on what kind of approach they can adopt when they come for an APA in a newly set up or yet to be set up manufacturing company, knowing that in the first couple of years they will have losses. Any thoughts, any suggestions you would have for such taxpayers, sir? Mr. Bansal?
So, firstly, as all of us know, the purpose of the transfer pricing is to benchmark the transaction. So, we want to find out the arm's length price of the international transaction, and we are not per se looking at whether the losses are as per whether the losses are justified or not. So that is not the purpose of the exercise. So apprehension of this, I should not say apprehension, but that's natural, but there would not be any upfront reason for disregarding the losses incurred. So whether the losses are due to the international transaction, which is the covered transaction under the APA, is the important question. So that would be seen whether it is due to the covered transaction in question that losses are being incurred, or is there a different reason for that? That would always be seen. So let us not have any misgivings or apprehension on that count. Now, even if there are, suppose let us say TNMM, transactional net margin method, is used, where we are looking at the profits, and initial years there is a loss, and in those years it is there could be a capacity utilization issue, or there could be some similar issue. So therefore, those adjustments are permissible under TNMM, and they would be duly taken into account to see what is the situation. Then the benchmarking will obviously take that into account. So let me dispel any doubts in this regard that every case of operational losses in the initial years will have difficulty in going through.
That's very encouraging and heartening, sir, to hear from you that, and I always believed it, but it's good to hear from you that just because somebody has losses, it doesn't mean that it disentitles you or that your APA cannot happen. The real transaction has to be reviewed the circumstances have to be reviewed, and there could be other adjustments made. Capacity utilization is one of them. So that's very heartening to hear. If I may turn to Bhaskar sir. Sir, we've seen a large number of APAs being done in the space of service industry, KPO, BPO, high-end R&D, low-end R&D. Some of them end up contributing to patent developments. The cost base varies in each of these. How does the APA office or the Competent Authority office look at these cases? Is there some guideline? Is there some parameters? What would you want to share with us?
Yeah, see, the guideline or the parameter is simply the FAR, to put it as straight as we can. It is the functions, the complexity of the functions, the contribution that the applicant is making to the overall business, or the value added by the group, which will decide whether he is an ITS who is not involved in analytics, or an ITS who is carrying out analytics, or he is even higher than that and is a KPO. Let us say that these are the three levels of an ITS operator. Similarly, will be for the IT industry or the software development, whether he is carrying out any element of R&D in the sense, is he involved in conceptualization? Is he involved in the designing of the software? Is he involved in thereafter, once the software is developed, is he involved in its on-site testing, or in its installation at the client site, so on and so forth. It is these facts which will decide what is his characterization. You see, not just for the service sector, but for any APA, the characterization is the bedrock of any of the next step, which is the choice of method, and then the choice of comparable, and the comparability adjustments, if any, that are required. So simply put, it is the functions that he performs delineated correctly, which will decide as to which of these buckets is the applicant going to fall into. As regards the cost base, over time we have tried to standardize this as much as we can, because eventually that is one of the principles that the APA should function upon, that because the rules of the game should be fixed before the game begins. So generally speaking, there are certain items of cost which will figure in any applicant where there is a return on cost mechanism, methodology of remuneration. So yes, then there will be certain specific factors for each case, but generally speaking, we have tried to standardize basic items of cost. So that is how we generally look at these cases, and we've been largely successful so far.
Great, thank you for that. So moving to the next theme, PE attribution. The law was specifically amended to allow undertaking and concluding APAs for attribution to permanent establishment. What we understand is that very few APAs have actually been concluded in this space. Now, there could be broadly two buckets of PEs. One could be a branch office or a project office PE, which is, there is a specific office, there's a defined set of activities and business happening. The other could be what I try to call a virtual PE, like an agency PE or a service PE, which is established due to the fiction of the tax treaty, relevant tax treaty, or the domestic law. Very few APAs have been done. Any comments on that? And anything you would like to share with the taxpayer community? Because there is a lot of interest in PE attribution related clarity that people want to achieve. Again, both of you, Rajat sir and Bhaskar sir.
So first of all, let me say that PE attribution, profit attribution to the PE is, as per the MAP experience or competent authority experience, was always a slippery item there also. So if you look at I recall that the resolutions were much more in the transfer pricing arena, and very few resolutions could take place in the PE space, because there was a different reason for that. That firstly, the existence or not of PE was in question. But as we discussed about AMP, sometimes it may be worthwhile for both sides to have a certainty on the aspect rather than litigation. And therefore, if one moves beyond the PE existence, one can go on to the attribution part. Now, therefore, what Manoj said, I'm just trying to highlight the importance of that, or how it can help in achieving TP certainty, is through the mechanism of an APA for profit attribution of the PE. Definitely, it's a very promising area for achieving tax certainty. PE profit attribution, otherwise through an audit, will always be a litigated area for very long. So now, earlier we were the international transactions of PE were always subject to the transfer pricing audit and always subject to APA. They were also could be covered under APA. There was no restriction. But now it is about profit attribution to the PE, which is just different or distinct from benchmarking of the international transactions undertaken by the PE. Now, there could be different approaches followed for service PE or a fixed place PE or an agency PE. It would depend on the facts of each case and how it could be done. And Rule 10, there is a rule in the income tax rules for attributing profits to a PE where no accounts are maintained. So on similar basis, a way out can be found for profit attribution to a PE.
Yeah, Manoj, I think only one APA has been signed so far, a unilateral APA on profit attribution. And I was in the CIT of the team which signed that APA, and the experience that I can share is that the APA team and the taxpayers need to have a lot more data at their disposal to come up with a solution that works. Because this is not like a one-sided method that can be applied by using TNMM or anything. So we really need to have the amount of sales that are made out of India and so on and so forth. I mean, that's very basic, but much more data which will allow us to understand what are the drivers of the business, how much of that is going to be attributable to India. So it's been done. I'm sure there will be more APAs in the future, but I can say this, that taxpayers should be prepared, and applicants should be prepared and ready with data, and should be able to support the APA team on this, because immediately after this we had another case, and the applicant told us that all this information that is required is not at their disposal, so that APA is not going anywhere. So that is something that taxpayers should be ready for. Just because there is a PE, so you have a PE attribute, so let's file a PE attribution. APA is not going to work out that way. There is a distance that needs to be traveled, and much more than in an APA related to arm's length determination of the arm's length price.
So thank you, sir. Very candid and very direct answer. Just because you're looking for a PE attribution, you wouldn't get it. You need a lot of information, data, and if it's on the table and both the sides sit down and cooperate with each other, possibly there can be. And as you said, one such APA you concluded recently. I'm aware of many taxpayers who are interested. So with those encouraging comments, as well as the caveat that come with all details, all facts. That's great, sir. Another theme, customs valuation and transfer pricing. Obviously, and maybe Mr. Bansal, if you could comment on this. They have opposing objectives in some way, complementary as well as opposing at the same time. However, given that the fact that customs valuation also seeks to achieve really an arm's length price, they may not use the word arm's length, but they want to achieve an arm's length price. Transfer pricing wants to achieve the same thing. And customs duty is actually also a real tax being paid based on the customs valuation. Can customs valuation provide a reasonable counterbalance alternative to arm's length benchmarking? Particularly in APA context, where you will have the opportunity to sit down, review what was done in a customs valuation situation. Any thoughts on this, sir? So maybe
Well, first of all, I would say that customs valuation and transfer pricing interplay will only be not in every case, but only be in cases like import of raw material, goods, etc. So I'm trying to reduce the magnitude of the problem and say that it is only confined to certain transactions relating to import of material, etc., where there is a valuation by the customs and there is a approach of transfer pricing benchmarking by the income tax authorities. Now, obviously, the objectives are divergent. I mean, they are wanting to increase and the income tax authorities may be wanting to decrease. So due to that, there could be a situation of conflict between the two values that are being determined. Now, as to how to balance this, and as Manoj said, in an APA scenario, whether the customs valuation can be taken into account, I haven't come across this actually in a practical situation, in an APA situation especially. But first, let us try to understand what could be the reasons for the difference in the value, apart from the subjective approach of the officer concerned who is dealing with the matter. So as Manoj said, the principle in customs valuation is also arm's length basis. And still we would come up with a different value in the two valuations, arm's length in the customs and income tax. So that could be because of the way the rules and legislation for both are framed. Like the methods here and methods there are not exactly same, though they may have similarities, they are not same. The priority of the methods may not be the same, and adjustments allowed under the two are different. So various reasons could be there for different value emerging out of the two. But ultimately, it's a question of valuing the same goods or raw material, etc. So it's not wrong to expect that the values should converge. And in that direction, I would say that maybe there is a scope for some kind of collaboration between the authorities of customs and income tax and see whether this is possible. And I believe there was some MOU signed on in 2020 for exchange of information between CBDT and CBIC. And I keep hearing about this topic in some or other forum where both the sides are present. So let us see whether if there is really a serious issue here, then what kind of solution are possible. I can only say that the boards are aware of this issue, and therefore, if there could be some convergence or a positive step taken to, I have no idea, but I think that this issue is known, so there would be there's a sensitization, and therefore, one can hope that there could be some convergence.
Very, very encouraging comments there, sir. The chat box and the Q&A that we are receiving from the participant has actually been buzzing with questions. I'm trying to just probably pick up one or two ones. Term test. Mr. Bansal, some countries allow a term test or multiple years to be evaluated together in an APA. India's position on that, sir?
See, we do not have it in our legislation. We are bound by our legislation for an APA, and term test meaning thereby a combining of various APA years together to benchmark the transaction. So that is not permissible at the moment.
Okay, understand. Another question that's coming up from participants relates to MAP, and Bhaskar sir, if you want to share some thoughts on it, what is happening is while the company is concluding an MAP, but the field office is initiating penalty proceedings on the incremental income which is agreed as part of the MAP process. Any thoughts on how this should be addressed by taxpayers?
Yeah, I'm aware of that. That this is a problem. The thing is that under the new section 270A, the latitude with the assessing officer is also somewhat limited as compared to what it was under 271(1)(c). But what the tax can, I'm sure, successfully argue attested this position. It demonstrates the lack that the bona fides of the taxpayer, and there is no malified intent, at least to the issue of misreporting. Underreporting is a slightly dicier topic, but at least he can show that there was no intent to misreport, and the two competent authorities have attested that intention.
Okay, we'll take that piece of advice and respond to such penalty situations accordingly. But also a request to both of you, as you feed back into the board, is as part of the MAP program, could there be something to protect taxpayers from penalty, assuming the facts are not where they have tried to evade taxes. We've actually come to the end of the hour that we had slotted for this. I must acknowledge there are so many more questions which are popping up here on my screen, and my colleagues here have slipped in pieces of paper with questions. We will respond to everybody via email or phone with whatever questions you've raised, and please don't stop. Continue to raise your questions. If something requires us to go back to Mr. Bansal, to Mr. Goswami, we will do that and help that conversation. But for this moment, I want to, on behalf of KPMG, extend our sincere thanks to Mr. Rajat Bansal, Principal Chief Commissioner, and Mr. Bhaskar Goswami, Competent Authority Joint Secretary, for coming at this forum, sharing all these detailed insights very candidly, very transparently, and educating us as well as the participants. Thank you, both of you, for your thoughts. Really appreciate. Also, sincere thanks to all the participants who have joined from different time zones. My team has slipped in to say pretty much every continent on the world has been represented on this webinar. Thank you for that. We will continue to engage, and once again, we will respond to all the unanswered queries. We will connect with you. Thank you, everybody, and enjoy your evening or your day or your night, whichever part of the world you are in. Thank you. Bye-bye.
Thank you. Thank you.